Okay, everyone, welcome to our very first class on financial modeling and data analytics. And I'm so excited. We at Miramar, we are excited to have you registered. Basically, this class is supposed to be for 16 persons. Most of our participants just sent messages. About 2% said their car broke down. They are currently on their way going back. But that notwithstanding, the classes are being recorded to ensure that everyone follows up perfectly. And one more thing, I also want those of us who, if you know your system is on, it's also very important, okay? Because whatever we'll be doing in the course of this training, there is also room for you to also practice. And in next class, try to join with your system so that you can actually share. The sharing is something anyone can do. So you can actually share your screen. Then I should be able to see for those persons who are following. So today is our very first class, and looking at the timetable, we are to look into financial modeling introduction and some spreadsheet essentials, which are also very important. And we're also meant to have a view on some examples too, which is also very important to ensure that we are able to achieve our major aim, which most especially also involve the aspect of advanced techniques, which is very important when you want to um, expedite financial modeling workflow. So moving forward, the whole essence of this training is to give you an insight to ensure that you are good to go in financial modeling and data analytics. So a little introduction based on that. Here in Miramar is part of what we do. We guide you and give you an effective training so you'll be able to make use of these tools, which will enhance how you your performance and how you carry out your tasks. So part of the applications we'll be looking at in this class is an application we call Power BI. Okay, so the Power BI is here on my screen. It's here. I'm going to share it now with you. So this is the Power BI. Okay, after today's class, I will guide you all on how you can be able to install it on your system. Okay, so this is the Power BI. We will be using it because it's very important. It's an effective, application which you'll be using. Right here on my screen, I believe you can all see clearly. We have add data to your reports, and you can see import data from Excel, import data from SQL Server, paste data into a blank table, try a sample data set. So in as much as you are an accounting professional or a finance professional, it's very important that you are able to work with this application called the Power BI. So in this class, we will be looking into how you'll be able to make use of this. And of course, you know that data analysts are on high demand. It's a knowledge that you could monetize. It's a skill you could use out there to also fetch and make money also for yourself. So it's very important. So I'm going back there. The Power BI, it's a tool, like I said, for finance and accounting professionals, and it is developed by Microsoft. Okay, and you make use of it when you're trying to do your data visualization, which by the time we proceed with this class, you will see how most of these things will be coming to play one role or the other. So it has a lot of importance and other benefits. For example, accurate report of financial data. It ensures that your financial data is accurate. Okay, it also gives you real-time insights, okay, on your financial data. And with the Power BI, you can access your data reports and dashboard from anywhere and at any time. You can also build dashboards like sales dashboard, different kind of finance dashboard. You'll be able to do that. And you will also be able to consolidate large volumes of data, which is very important. So in this training, we will be looking at several data analytics tools, which will help us as far as financial modeling is concerned. And you can see them right here on my screen. We have the first one, which we'll be looking at, which has to do with the spreadsheet. So the spreadsheet is a very important data analytics tool, and almost everybody knows that it is the common tool out there. Okay, it is the common tool out there. We have business intelligence, we have the visualization tools where the Power BI and Tableau comes to play. We have integrated analytics tools within ERP accounting applications. We have audit analytic tools, which are also very important. But our major focus in this training is the spreadsheet and that of the Power BI, which is going to ensure that everything works perfectly. And right here in our training program, we focus more on efficiency because we believe that it's important that our program and at the end of the day, you get something that is going to work for you. And that is very important. So I will also quickly share. Don't worry, we're going to do calculation. We're going to practice. I'm going to practice. That's part of this. So how can finance professionals or accounting professionals use data analytics, as far as financial modeling is also concerned? Now, the first aspect is financial forecast and analysis. So in this training, you will be looking into that, how you can be able to do your forecasting, how you can be able to, come up with models. And also strategy is also very important because every business needs a successful strategy. They need a strategy that will help them grow, that will help them be able to withstand challenges and also be profitable. So it's very important. And also the aspect of risk control. So when we will be are going to be looking at financial models, it's very important that we pay attention to these very aspects because it's very important for us. Also, performance, to monitor performance is also another important aspect, which finance professionals must pay attention into as far as data analytics is concerned. And also the aspect of improving reporting, which is also very important because reports is important. When it comes to the accounting line, even in the finance line, we know that reports is very important. The end point of everything is always the reporting aspect. So we must ensure that we look into these key aspects, which are very important. So without wasting of time, let's look into what we have for today. And from our timetable, we'll be looking at introduction to financial modeling before we then look into other aspects which has to do with the advanced formulas that expedite um, techniques that expedite financial workflow. So let me start by saying that in today's information age, managers rely on quantitative models and big data to make financial decisions. And these financial decisions have a profound impact on the performance of their organizations. And it's very important that you enrolling for this training should be able to produce the quantitative models that top management would want to use to support their decision making. And in as much as you're here in this class, this course is suitable for you and for those some other persons who also enrolled. I learned that some of them told me they are not in the finance line, some are seeking career in finance, but also others were students with broader interests who wish to strengthen their general modeling skills. And that's also part of our the objective for this very class. So it does not require any quantitative background. The training does not require any quantitative background other than what is covered in the course outline, which I sent to every one of you. So what we are going to do in the training is that we will help you master modeling frameworks, which we'll be looking into in the course of this training, like financial statements mapping, a lot of that's which were being stated. So everything will be looked into. So the modeling tools which I showed you, will be used in a variety of ways for you to be able to carry out your valuation and other aspects which it might be important for you to take note of. So please just take note of that. So for the aspect of spreadsheets, we'll be using Excel because Excel is very important when as far as that of modeling is concerned. Excel is very important. So we'll be using Excel is going to help us in the area of sensitivity analysis. Okay, I believe you saw that in the course outline. We'll be using it in that very aspect of sensitivity analysis and also other aspects which are also very important. Now, what is financial modeling all about? Financial modeling is just the process of creating a summary of a company's I will just use company's expenses to the company's earnings, in the form of spreadsheet that can be used to calculate the impact of a future event or decision. And it is only a framework, or we can also refer to it as a set of guidelines which are used to derive numerous financial models. So in today's class, we'll be looking at a simple model. We'll just be looking at a simple one in today's class, but trust me, it's something that is going to give us a good exposure as we officially open up this very training. So before we look into that, what we have for today, there are various types of models. So just take notes. There are various types of models which are created for different type of decisions. So when you're trying to learn this, also remember that. And some of the important models are that of profitability planning. And most reasons why people use financial modeling is for them to be able to optimize the day-to-day operations of a firm. And this particular model, which is called the profitability planning model, is used by companies to ascertain how they can deploy their resources in the most profitable manner. And profitability analysis of a firm is different from capacity planning. Okay, we are most of us here, well, if not everybody, we're all professionals. So capacity planning is done keeping only operational. Hello, sorry for that. Sorry for that. I believe you can all see my screen now. Hello.
Yes.
Okay. So I was talking about the various types of models which are created for different types of decisions. Okay, so I can as well come over here. So I just put that here, types of models. All right, so I said the first which we'll be putting into consideration in this training is the profitability planning model. And I was saying before the interruption that that model is very important. And most times people often misuse it for capacity planning. And I was saying that they are not the same thing. That capacity planning is done keeping only operational considerations in mind. How do the business operate and so on in mind. But however, when it comes to profitability analysis and planning, it takes a different holistic view. And usually, such type of models enable companies to decide on an optimal product mix, which would enable maximum profitability. Okay, so needless to say, such models are operational in nature, that's true, though their complexity is low since assumptions are being made only about the immediate future. So we can say that it is not feasible to spend time in long-term profitability planning. So don't worry, when we get to do some practice, we'll be able to see this. So the other type of model also is the liquidity planning model. And companies around the world, you agree with me that a lot of them owe a lot of debt. So they need this kind of model because it's very important. And how do they go about this model? They go about it by being able to create a model that will be able to ascertain and look into the risk part. And if a company fails to manage its cash flow, also it also gets to affect this very aspect. And there are financial models which enable companies to keep track of their solvency. And this is one of those type of model. So this model take into account factors such as, let's say, interest rates, currency valuations, all these are also very important that it puts into consideration, takes into that of interest rate, like I said, and also account for loans. So we'll be looking at the aspect of amortization table, calculation of repayments, so on about all that. So companies could simulate extreme economic conditions to see whether they would continue to remain solvent if the conditions, became a reality. So we also have that of the credit planning model because businesses is mostly conducted on credit. So companies need to extend credit if they want to increase sales. So however, that of credit is extended, but there's always risks, which is also always present. So there are financial models which help companies make these decisions, and such models take information from credit rating agencies, and that's majorly why I will always make mention of that of the credit model too, which is important. We also have models like the valuation and that of financial instruments and others, which are also very important. But lastly, you should always have in mind that a financial model will be a key part of all strategic decision making, because one of the things a financial model does is that it gives decision makers a clear projection of the likely financial implications of the strategic decisions that they are looking at. And it's very important that if a business, for example, is entering a new product line, it's very important that that is also put into consideration. So ladies and gentlemen, without wasting of time, let's get started. And in today's class, we will be looking at the spreadsheets, which we'll be using to begin this very training program. So far, I believe you all have been hearing me, so we can flow together. So from the contents, we also have advanced techniques to expedite financial workflow, which the very first session there was what was stated was efficient formula writing. So what that is just talking about is just you being able to write your formulas when you're working with that of the spreadsheet. And one of the ways for you to be able to do that is what we call the reference, because there are different referencing styles. Okay, so let me know.
Sorry to
Can you hear me?
the showing is still on types of models. So, okay.
Can you see my spreadsheet now?
I can.
Can you see my spreadsheet?
Yes, I can.
All right. So for that of the financial model, there are basically steps when you want to create a financial model. Okay, there are steps which need to be taken in order to create a working financial model. And the steps, of course, historical information is very important. So you have to start when you're trying to create a financial model. First and foremost, step one is that you have to start with historical facts. It's very important. Now, what happens here is this. If the company preparing the financial model has been in existence for some time, it will be wise, for you to start with its historical financial statement. And that's major reason why when you go on YouTube, when you do your research, you always see, that historical financial statement is always being what's stated. So it's very important that you take note of that. And the reason for this is because an analysis of the past statement often reveals hidden trends, which may sometimes shaping, the way you're able to go about everything. So these things like this needs to be understood for you, because it will guide you on what you're going to do. So let's say, for example, looking at the very first step, which is historical facts. It's very important that as an accountant, as a finance professional, you are able to come up with to make certain decisions. And one of the first things you have to do when you're working with financial model, or you want to be an expert in this line, is to understand what we call trends. And everyone hear me? Hello?
Yes, I can hear you.
Okay.
Yeah, with you. Yeah.
I said you need to understand the trends. Okay. For example, you go to a company and they give you a work to do, or you want to do a work, and they give you a lot of information, a lot of data. Like I made mention that you have to start with historical facts. Okay. The first thing you need to do is to understand the trends. Try to get the trends. Now, what do I refer to the trends? Yeah, using a spreadsheet. Spreadsheet is the best way you can be able to get to carry out such kind of analysis. Now, let's say, for example, this is how we have started it now. As we have started, we are going with practical. Now, let's say, for example, we have a company, okay? And in this company, they have been operating for some years now. But when you go to the company, you are given some statements, which was in this format. Let me say we are given let's say you are given a 4-year financial statement to start analyzing them. So what do you have to do? The first thing you have to do, like I said, is to understand the trends. You need to get the trends, and I'm going to show you how to do that easily now. Now, what you're going to do, let's just work on this together. Let's just say we have 2018, 2019, 2020, and we have 2021. Okay. Now, for these years, let's say this is our sales revenue, or can just say this is our revenue. Okay, can just call this revenue. So let's say this is our revenue. Okay, and for our revenue, let's say we have 2050 based on the information that was given to you. Okay, and we have here for 219.31, we have for okay, I can say for this very year 2961. Okay, then for 220 it's 31, for 220 2021 it's 35. So this is just a simple one, simple statement being given. Let me try to zoom this so we can all get to see it clearly. Okay, so we are given these 4-year financial statements and you're asked to start analyzing them. So the very first step, like I said, is to understand the trends, which is very important. Now, let's say part of the information given was also your cost of goods sold. Okay, the cost of goods sold, I can just use COGS, cost of goods sold was given to you, and I can put this number here, 1114. I can say 1332. Okay, I can say for 2020 it was given as 1221. For that of 2021 it was given as 1057. Then we also might have our gross profits, okay, which is also very important. So our gross profit, we can say for 2018 our gross profit is 1411. Okay, I believe you can see my screen. So for that of 2021, it is 1882. Okay, for that of our gross profit. Now, everybody look up. Are you there? Can you all hear me? Hello,
Yes,
hello,
sir.
sirs. Can you hear me?
Yes.
Okay. Now, if you recall, as we are practicing, there are a lot of things we'll also be taking notes of. Now, if you look at, you will see that the gross profit is not showing completely. I believe you can all see this. The gross profit is not showing completely. Now, instead of you, there are some shortcuts when we are talking about how to expedite your financial workflow. There are a lot of shortcuts I'll be showing you in the course of this training. So instead of you coming here, because if gross profit is not showing, by most, you may be thinking, yes, the best way is to come over here and drag, right? I believe that's what we all know how to do. But instead of doing that, you can just come over here, highlight the whole spreadsheet. After highlighting, you come to this very first line in column A. And what do? You double click on it, and it's going to ensure that everything fits in properly. So these are just some little techniques that are involved. So don't worry, let's just proceed. As we proceed, you will get to learn a lot of exciting things. So the gross profit is given. Let's say our operating expenses is also given. Operating expenses. Operating expenses is also given. And then we have it as 113 for 2018, 113, 0.20. And we also have here for 1163.16. And then we have it for 2020 as 1221.22. Okay, then for 2021, we also have it as 1015.18, which is also very important. And let's say we're also given our EBITDA, earnings before our interest, and we can say EBITDA is also given as let's say this is our 24 for 2018, 241.22, and for 2019, 266.71, for 2020, 374.47. Okay, then for 2021 is given as 531.13. Then let's also we are just doing assumptions here because it's also part of the whole process. So as financial modeling is concerned, so our depreciation is also given. Let's say depreciation is and amortization. Okay, depreciation and amortization is also given as, can say it's 25 for 2018, can say 38 for 2019, for 2020 we say 42, for 2021 we say 40. Then let's also assume we have our earnings before of this one a bit, and also we can say we can also come up with an assumption on what should be here. We say this should be 244.51, and for 2019, 284.54. Then for 2020, 317 471.57. For 2021, 471.26. Then let's also add our finance costs, because it's also very important that it's taken into consideration. Can say for 2018 our finance cost was 38. Then for 2019 our finance cost was 68. For that of 2020 our finance cost was given as 70. Then for 2021 our finance cost was given as 55. Then let's also say we have our EBT, which was also given as 118.81. Okay, and also we can say 232.73. Okay, then for year 2020, 256.71. For 2021, 622.21. Then we now have our tax. Okay, we now have our tax after our earnings before tax. We have our tax, which was given as 182.31, and can also say 206.21, and for 2020, 209.13, and also for 2021, we have it as 207.13, which is also very important. Then lastly, okay, profit after tax, which we'll say, let's say is given as 13.1. We can put this 14.7, 14.7, and also 28.17 here. And let me put this as 204, 204.14. So ladies and gentlemen, this is a 4-year financial statement that you have been given to by the company, and you're asked to analyze these statements, which could be a simple, short, simple model. You're told to analyze it. And I told you, when you're working as an accountant or a finance professional, there should be always something different about how you do your work. Okay. At the end of this class, you should not even be working with your mouse that much, because if you look at the content, we have a particular subtopic which is working without the mouse. But I may not be able to cover all that today. In next class, I will touch some things here. So one of the or working without even your keyboard. So instead of coming here to drag this, like I said, if you see operating expenses is hiding, depreciation and amortization is hiding. Now, what do? I said, come at the edge here, highlight everything and click here, and it's going to enter everything properly for you. Now, but this is not the problem. What is the problem? We'll be going on a short break, which I will create a new link and send to every one of you to rejoin. But let's see the remaining time if we will be able to cover this very first session. Then when we come back, we'll be going to solving a more practical problem same way. All right. So now you were given this 4-year financial statement and you're told to analyze it. Now, for every reason, when you come across such a situation, whether it's in an interview or wherever, the first thing you need to do, like I said, is to understand the trends, okay? Because this is a historical information, and it is wise that you understand the trends, the changes, what actually took place, because financial modeling is all about that, okay? So what do? There is a tool here in Excel you're going to use to understand the trends. It makes it easier for you to understand the trends. And we call it the spark line. We call it the spark line. I believe everyone can hear me. Can you all hear me? Hello?
Yes, we can.
Yes. Okay.
Yes, we
This,
can.
we call the tool the spark line because you want to understand the trends. It's the very first step you should take note of. Okay. You want to know, you want to understand those very important information. Following what we said is the first step when creating a financial model, which is start with historical fact. So if I want to do that, I will go straight to my insert tab from my home menu. Then I will move. You will see where we have line. I believe everyone can see this line, spark line. You can see it. So I'm going to click on that. When I click on it, it's going to ask me the data range. What is data range? Now we have what we call range in here in Excel. Is actually what is being targeted. So the data range is what? We are starting from revenue. So I'm going to highlight from the first year 2018 to 2021. So that becomes my data range. Then location range. Location range. Where do I want to put my all right, so before we start doing this calculation, you were asking about the elements, and I was saying that two most important elements are that of the earnings and the expenses. And the earnings has to do with revenue. And it's wrong if I come here and change this to income, because it's not going to be correct. Because in an organization, there might be different income sources. So revenue is the right word to use. So I was saying that those elements are the parameters, which is very important for you to consider. Now, if you were following, when I started this modeling of a team, I said that the very first step is to do what? Start with historical fact. And the reason for that is so you can be able to understand the trend that have already been going on, since models is majorly used most times by companies that have already had a good going concern, have been operating. Okay, so the next second step was even what you're now asking, which is those parameters, those elements. Okay, you have to also recognize those elements. So the purpose of a financial model fits into that very aspect, because one of the purpose of a financial model is to accurately forecast the revenues and expenses which may occur in the future. And it is important that you understand that these revenues and expenses do not function in isolation, because the revenue and expenses are actually the result of an interaction between several underlying factors or underlying parameters within the organization. And it's important that if you want to do your prediction or you want to do your forecasting or whatever, you must look into what are those elements involved, because those are what will ensure that your predictions, your assumptions are very accurate. And understanding those key elements is what will influence the business, okay, making it of vital importance, because every industry has the way it operates. For example, let's say a company which use commodities as their inputs or outputs, those kind of companies will be mindful of the effect of fluctuations in commodity price. Okay, I'm not talking of fuel, which is an overhead. I'm not talking of fuel, which is an overhead in this case, but we are just looking at other kind of commodities, which, for example, let's say this same company deals on things like steel and cement. And of course, an increase or decrease in steel and cement prices will have a huge impact on the real estate industry. Now, similarly, if such a company derives a major part of its revenue from exports, then it may be vulnerable to fluctuations in currency rates. So you can see all these things they are connected. So at the end of the day, as a financial modeler, it's expected that you as a financial modeler must have identified all the relevant parameters or all the relevant elements which are likely to impact that very business or that very company. Okay, so these parameters or elements must be isolated and provided as an input to the user, and it will provide you with the ability to validate your results. And the reason why I don't want to go much further is because the very first step is very important. Before you be able to say you're carrying out an analysis, to look into deeper, to come up with assumptions, why is this company not profitable? Why is so thing taking place? You first of all need to do what? Understand the trends. And that's why I said that the very first step, in as much as it is you looking at the historical fact, you must understand the trends. And how do you get the trends? That was where we stopped in the previous recorded session. Just give me a minute. Hello, can everyone hear me? Give me a minute, please.
We can hear you. We can hear you.
Okay, then Sir Peter, good of the suggestion you made. So moving forward, each material will be sent before the class day, so we can have a good learning experience. Sorry for that. I was actually engaged before the time. All right. So now,
Thank you, sir.
okay, sir. Now, how do you get the trends? How do you get the trends? Like I said, you must understand the trends. Now, right here before us is a 4-year financial statement, and you are given those statements. This particular statement is a simple one. You're asked to analyze them. the very first thing that should come to your mind is to understand the trends. To understand the trends, you need to get the trends. Now, to get the trends here using the spreadsheet, you have to come to the Insert tab, then you come here, you see where we have line, okay? And I said it's called the spark line. So that's what you're going to use. So now if I'm coming here and maybe the chief financial officer calls you, the accountant, that please go and analyze this for me. I want to know what year did we do well? What year, how was our revenue? So how was the growth and other things, maybe the expected rate, or the expected rate portfolio and so on, which is one of the things you're going to look into in this very class for today. So what you're going to do, definitely you have to come over to that line, spark line. Now, when you open it, you're going to see two required fields. We have the data range and we have the location range. For the data range, you're going to highlight those data you want to analyze. Okay. First of all, you start with revenue. You leave the year is not part of it first. Here is just the subject. So now revenue, you're going to take down this way. So I've just taken down the whole revenue for the 4 years. So you can see it's entered here. So once you have done that, you then come to location range. Location range, where do you want the outcome or the results of the trends to be placed? We want it to be placed in this very column I. So we are going to select that column. Okay, we're going to select that column I. I'm going to come and select column I. Then I say what? Okay. So ladies and gentlemen, you can see right here, we have a line. Okay. So now this line might be looking this way, but it's going to help you understand the trends. And what do we mean by that? This way, it's already giving you a good picture that as at a point, the revenue was dropping, okay, but at a point it was rising. And you can see that at this point, it means that yes, the revenue is on an increase. Can you all see that? So same way, hello?
Yes, sir, we can.
So just go ahead since we have the recording.
What
right.
you did before.
I can drag this down. Please, the person with that sweet corn. Thank you. All right. So dragging this down, you can see the whole line. Okay, we call it the spark line. So as an accountant, as an auditor, as a finance professional, you must always work with this when you want to understand or to get the trends. Is very important. So you can see right here, you can see them right here. So you can see for our cost of goods sold, because cost of goods sold, if our revenue, when our revenue is increasing, our cost of goods sold should increase also. But right here, you can see something is happening here. Okay, our cost of goods sold was dropping. So at this point too, we can see our gross profit, can see our operating expenses, okay, for year 2021 reduced. So this way you have already gotten a picture of, you have already started your analysis work to have a picture of the trends of how things have been going on for these past 4 years, okay? So this spark line helps you to make it easier for you to be able to come up with such analysis, okay, to have a quick view of what is happening. And you can go straight to even our profit after tax right here that we have. You can see that it's dropped, if not for 2021, when what happened, it increased. So this way, as a financial modeler, you've already gotten to understand, even based on the cost and behaviors. Okay, if you're looking at the operating expenses, looking at the finance costs and others, because a profit and loss statement, shows a static view of the expenses involved. And that's why you are seeing it. So that's one of the elements also. Those expenses involved must be showed. However, the reality is that not all expenses behave in the same manner. Okay, that we are seeing the expenses fall back in 2021. It should show to you that not all expenses, behave in the same manner when the volume of production increases or when the volume of production decreases. So for instance, we could see the depreciation charge, which we have here. So the depreciation charge might remain the same in some cases, might remain the same, okay? Might remain the same regardless of the output that, if this company is a kind of a production company, regardless of the output that a machine produces. Also things like labor charges can also come in, to play over there. And if it's they also has that of raw materials, which are also cost too, and which might vary directly with the level of production. So these things are important, and there could be costs like electricity costs, which may increase with the increase in production. And one of the reasons of this is because units of electricity are more expensive as compared to previous ones these days. So it is important that you also understand the different behavior and the different pattern here, in as much as you're working with the trends using this spark line to understand the trend analysis. And another way you can also do this quick to have a quick overview, you can also decide, okay, to say you don't want to use the spark line. You can go same way and use the column. Okay, you use the column, you say what's the range, you say this is the range, you say what's the location range, that's the location range, say okay. So you can see, I can decide to use column. So which one works for you, okay, you just use it. So this way you can see that in 2018 our revenue was low, but in 2019 it increased, in 2020 it increased, in 2021 it increased. Then our cost of goods sold, reduced in 2021. As of 2021, you can see our gross profits is on increase, our operating expenses reduced, and this way it's already making it good for you. So it is important that this behavior of different costs or different patterns here has been fed into the financial model, and this will ensure that the model here gives reliable results when it is simulated to know the expected profitability at the different years which we are looking into. So it's very important that you put that into consideration. Then also another thing you also need to put into consideration is as a financial modeler, we call you a financial modeler. So as a financial modeler, you must ensure that your model is logical at all times. For what I mean is that it is important that you identify the interrelationship between various parameters. All this now, you have to understand the relationship between these parameters and also model them. For example, like we talked about a rise in price. Okay, we know that a rise in price, because there are possibilities. If we even talk about fueling here in Nigeria, it is an overhead, and prices might change. So a rise in price would have an inverse relationship with the quantity sold. And similarly also, a rise in one expense may sometimes reduce or even eliminate other expenses. So the problem is that the relationship between the parameters is often complex, and it calls for the need for you to identify, identifying it and modeling them accurately, which is very important for you to do. So everything here starts with um, you understanding the trend. When you've understood the trend,
How do you read?
then you will know that, yes, I need to focus on this. I need to look into this. I need to provide a range for all my parameters, which is also very important, because at that point, you have to come up with more measures which need to be taken to ensure that to ensure that there is accuracy here in the model. And the reason for this is that all parameters which have been identified here need to be given, a particular range. And if the results of this financial model go beyond a certain range or a certain expectation, it should sometimes show an error. So companies then need to run thousands of carry out analyses to ensure that all possible errors which have been identified are rectified in the process. So the end result would be very good, provided that you start up well, so you can come up with something that will lead to decision making. And there are situations where you need to carry out scenario analysis, which is also part of what we'll be looking at in this training. So today is just introduction. So the financial model should be built in such a manner that it does not give only one result. I believe everyone can hear me. It should not just give you only one result. So when you're building a financial model, ensure not in a way it gives you just one result. Because the reality is that the future is highly uncertain. Decision makers will be better off if they are provided several scenarios. And in if I want to give you, okay, let's look at a quick view on that aspect of scenarios. What we mean by scenario, because if, for example, right here, if, for example, you can say our revenue is for 2021, our revenue is 3,500, and our cost of goods sold is 1,500. 57, and I was saying that when revenue increases, cost of goods sold should increase also. But yeah, it reduced. Okay, it's also reduced, but it's not bad anyway. Now, you can decide to carry out some scenario analysis here. Okay, you can carry out some scenario analysis, like I said. For example, the best case scenario when revenue are the highest and costs are the lowest. So if we look at 2021 year, revenue, what is the highest here? You can see that revenue is the highest, 35, and then our costs, our costs are even making up that of the lowest. And that's just the best case scenario. When you have such a scenario, then you know that yes, your model is good to go. But the worst case scenario is when costs are the highest and revenues are the lowest. Imagine cost was the highest. When you compute all your costs, cost was the highest and revenue was the lowest. You know, it will not really sound good to hear. And that's major reason why it's not really perfect for you to look into those kind of information from that very aspect. So it's important that scenarios are being taken into consideration. Now, how do you do those aspects of scenario? Let's just look at it quickly. How do you take care of some aspect of scenario? So same way you come over here to your from your home tab. Now the scenario works with what we call that of the what if analysis. Okay, most of us we are aware of what if analysis. So financial modeling combines a lot of functions here which you use to model. So if I want to say, let's have a scenario, let's assume, okay, let's assume we made 3.5. Our revenue was 3.5. What will be our profit after tax? These are where scenario comes to play. Okay, these are where scenario comes to play. So what do we do at that point? I have to come to my data tab here, and then I come to where we have what if analysis, and I click on scenario manager. Now, when I click on scenario manager, it's going to ask me to add. I have to add the scenarios because at this point we were looking at the best case scenario when revenues are the highest and costs are the lowest, and the worst case scenario when costs are the highest and revenues are the lowest. And I was saying that at all time, they should ensure that the financial model should be built in such a manner that it does not give only one result. Please take note of that. Your financial model should not give only one result. Have different results because you cannot predict what may happen tomorrow. The future is uncertain. Price might increase. Look at today in Nigeria, dollar have increased. It's on a high increase too. So anything can happen. So for that reason, when you are doing anything here in financial modeling, don't produce only one result. And how will you be able to come up with different results is when you're using or carrying out scenario analysis. So for this, we can click on add. When I click on add, it's asking me the scenario name. So I can call this a worst case scenario. Okay, I can say I just want to know the worst case scenario. So companies uses this a lot when they are modeling. For example, a sales company might say, oh, what's the worst case if we are not able to meet up so targets? Okay, so this is how they will be able to do that, provided the whole information is connected to each other, then they will know that yes, if this is this, then definitely we should have profits. Okay, so I'm going to try to connect this now. I'm going to try to connect this now, provided we're able to look into that to see how we can come up with such kind of analysis. So the scenario, I will not touch the scenario now because it's something that is already part of our content, which we'll look at. So what I'm just trying to say in the nutshell is that the bottom line is that the financial modeling is an extremely complex task. Okay, and all these steps I've just made mention of, all what I've just said, are guidelines that will enable you accomplish your tasks. And the reality is that there are several more tasks which need to be undertaken based on the specific financial model that is being created. So to round off this class for today, one of the tasks we'll be looking at is a particular important function here in the spreadsheet, which is called the sum product. Okay, so we are going to take that as one of our case study for today. We're going to take that. So let's say we are asked to look for, I don't know, I believe no one have any question concerning these trends, concerning understanding the trends and how to get the trends. I'm going to take it back again. I said when you want to get the trends in any analysis, you come over here to the insert tab, you will see spark line. That's it, the spark line. So as an auditor, you must use this. As an accountant, you must use this. This is what is going to give you a quick overview and a quick analysis and interpretation of what actually went on for the years. And we right here, we're looking at this 4-year financial statement, which we said is very important that you must venture into. Now, we also use the column. Okay, you can also use win or slash loss. Okay, companies uses this one when they want to know the profit and loss and so on, and also so forth. You want to know the win and loss. I can also decide to copy that, and I said over here, and this is just a different one in terms of you doing that. And you can also decide to color it. These are things we'll look into as we proceed. Let me not just go too much further. And for coloring your financial model, it must be in line with the corporate color of the organization. Okay, you don't just come and be coloring it any color you like. You work with the corporate color of the organization. If the organization color is blue and yellow, that's what you should maintain in all aspects when you're working. Yeah, that's what you should maintain. So that's very important. So that was how. So for the spark line, same way, spark line, you can see it here. So all you have to do is either you drag it or you double click. Okay, normally Excel shortcuts, or you drag it down and you'll be able to see those spark line. And this way, someone can interpret this, what exactly happened for these very periods, okay, which are very important to put into consideration. So now let's say for these same companies, okay, for this same company, we were asked, okay, maybe what made up the revenue was sales of from different products that the company has. So let's say for this company, we were asked to calculate what is called the expected rates, okay, the expected rates portfolio, okay, or the expected rate. Now, one of the ways, or like I talked about the different tax which are involved here, which I said that there are several more tax which are involved, which need to be undertaken. Now, if you have such an example to look into, you're going to use an Excel function which we call the sum product, because the sum product is very important. And as we proceed in this class, you will be seeing us use it from time to time on how we can provide best solution to some of the items that we'll be working with in the course of this training. So let's move to the next sheet. Let's take this as our classwork. So everyone will also practice this after now, as tomorrow. So let's say we have some information like product, we have price, we have product and we have price, okay? And we have quantity. We have product, price, quantity. We also have revenue. So like I said, if you find out that it's not containing perfectly, all you have to do is to click, highlight every aspect, then you click here. That can fit in everything immediately for you. So let's say for this very statement that we had here, that the company that actually owns this is a company that produces products like Milo and milk. Let's just say Milo and milk. So for products, we have two products. We say one is Milo and the other one is milk. Okay. Now for products Milo and milk, let's say the price for Milo is 200 and the price for milk is what? Let's say the price for milk is 400. Now let's also say this was their total bulk sales for the periods, for the period. So their total bulk sales for the period. So I can say this is for Milo again. Okay, this is for Milo. Maybe a particular analysis we just want to carry out. This for Milo. So this is 300 and this is 400. Then this is for milk. This for milk. Our milk product, say 500. And this also for our milk product. And we said how much? We said it's also 600. So I'm just going to be showing you some things on how you can be able to perform some tax here. So let's say the quantity for our Milo is 30. Okay, that was sold at that price. 41 was sold at this price. 43 was sold at 400, and that of 45 was also sold at 500, and 48 was sold at 600. Okay, and you know for our revenue is going to be our price times our quantity. So it's just for us to say equal to this our price. Our price is 200 times our quantity, which is 30, and we can put this and also decide to do what, to drag this down, or we just click under it and it's going to come up. Now, most times, a lot of us, as a professional at this point, as a financial modeling expert, there are some things you don't need to do. Okay. For example, if I want to put the total, it's not all time you now come and say equal to sum. No, you should stop using all that. It's not allowed in this class. If you want to put total here, all you have to do, just hold your alt key. Alt. We have a key in your keyboard called Alt. Hold your alt and equal to. It's going to just capture everything, and you have your total over there for you. Then you can always decide that you want to put in this information. Now, I talked about tax, and that part of our content is looking at some advanced techniques that will help you expedite financial workflows. So there are advanced techniques. Now, one of them is what we call the sum product. Okay, the sum product is one of those advanced techniques that helps you expedite your financial modeling workflow. Now, what do I mean by that? Now, this is connected with our very first statement that we have here. We are trying here, our aim here is to calculate what we call the expected rates portfolio. Okay, I said it's called the expected rates portfolio. Expected rates portfolio. Okay, is what we are asked to calculate right here, find for that company based on this sales analysis that they have here. All right. So now I was talking about some advanced techniques that expedite financial workflows. Now, if you watch, I came here. How did I get this total? I got this total by calculating price times quantity to give me 6,000. Then I command the formula, and the formula generated this total. Now, instead of doing this, one advanced technique I could use to expedite this workflow is what is called the sum product. I can rather come over here and say equal to sum product. You can see it, sum product. All I have to do, array one, you can see array one, yeah. So all I have to do after saying my sum product, the array one is my price. So I'm going to copy my price. Okay, so when I copy my price, what do I do at that point? I'm going to say I multiply it with my array 2, which is this, and I say bracket close and I enter. So you can see it gives me same total as 86,800. So when you're working with your financial modeling, you don't need to, because financial modeling is always long. Those statements are always much. As we proceed, we see a lot of different kind of models. Okay, you may not have the time to go up and start calculating all this and be dragging. Instead, go to any sheet, anywhere you are there, just say equal to sum product. Okay, just say sum product, and the array one is always the first array that you're targeting, which is our price. So just say price times our quantity, which is here. Okay, and say enter, and this expedites this workflow for you. Now, let me show you something that is of major interest that would even make this look perfect for you. Now, what is that? Now, let's say, for example, we are asked to find out for only Milo. Okay, what's the total price for only Milo? We want to know the total revenue, sorry, for only Milo. The total revenue generated from sales for this product, box sales for only Milo. This price, these amounts may be in billions or millions. So I'm just trying to break it down. Now, if we want to know for Milo alone, for product Milo alone, is the sum product thing that's going to expedite that for you. Okay, now how are you going to do that? Same way, I can come over here and say for Milo, I can say Milo. Okay, or instead of saying Milo here, I can just come here. Now let's say you're told, please, accountant or auditor or whatever they call financial modeler, can you please tell us how much was generated, what's our revenue for only Milo? You say yes, you can do it. Okay, do it. What you have to do is to come here, you say Milo. Now when you say Milo, you come under here, you look at the products, you type the product's name, Milo. Now you know it's two products, Milo and Mick. Now you come here to Milo and you do what? You say equal to sum products. Okay, you say sum products. Now when you put some products, you're also going to seek what we have here, which has to do with what? Array 1. Now, at this point, array 1 is going to be all the products because you want to calculate the revenue for only Milo. And you're going to do it this way so that in case you also ask that, okay, if Milo is this amount. What's the total revenue for milk? Just like that. So what you're going to do for array 1, you will come over here and do what? You copy all the products, which is this. Now, by the time you've highlighted all the products, okay, what you're going to do at this point is that you are going to now say equal to, okay, this very product. What's the product? We say the product is Milo. So once you have done that, that equal to the product is Milo, I'm then going to close this bracket and say multiplied by the second array, which is the price. You can see this is the price. Okay. So when I say multiplied by this second array, which is the price, I'm also going to multiply it by the quantity, which is this. So I'm also going to multiply it by this quantity, which is this. So if I bracket this close and click on enter, it's going to show me how much was generated revenue for only Milo. So if I do that, I'm also going to put a bracket here to command this, and I say enter. So you can see right here that this is what we got. This is our generated revenue for Milo. So if you calculate these three Milo, it must give you 35,500. Now, if you're told what is that of a milk, all you have to do is to come here, change the name to milk, and say enter. To bring out the generated revenue from milk. So ladies and gentlemen, complete the video. All right, so I believe you saw what I did. I believe you all saw what I did. So if, for example, you were told that what is the total revenue for Milo, all you have to do at this point is to come to where you have milk and change the name to Milo, to the product, and say enter. Is going to bring it for you. So if you calculate this Milo, you will find out that you're going to get the same amount. We can try it. So let's say for a Milo, we'll come here, we'll say equal to, let's say our Milo is this first one plus the second Milo product plus the third Milo product, which is this. So if we say enter, you can see it gave us how much? Same 35,500. So the sum products, you must learn how to work with it. It makes it easier for you to, it's an advanced technique that helps you expedite your financial workflow. Okay, so from here, I can come and say, okay, let me also calculate our milk and keep here first. And if I come there and say this for product of our milk, and I say plus, I'm just using this as a simple one to give us an understanding. You can see our milk is how much? Our milk is actually 51,300. So now you want to be sure of this. You come over to Milo, you change it to milk, and you say enter. You can see it's actually how much? 51,300. 51,300. So ladies and gentlemen, this is just one of those techniques you use to expedite your financial modeling workflow here when working here. There are a lot of techniques. There are a lot of techniques which are also very important. Okay, and there are a lot of shortcuts which are also very, very important. For example, I can just round it up here, but this is where we are going to stop for today's class. So in our next class, we'll continue from here. Where we'll solve this problem on how to, a model for an expected rate portfolio for this very company. So I'm going to work on the materials, and I'm going to ensure that everyone gets the material so that you can practice within your spare time. So thank you very much. Thank you very much. Time is, and class ends by 10:30, and this is 10:33. So thank you very much. Thanks for staying with us. Thank you, Sir Emeka. Thank you, Sir Peter. Thank you, Sir Bass. Sir Bass Global. Thank you very much, everyone. Is there any question before we round up? Any question?
Hello, good evening, sir. So my question is
I cannot hear you clearly.
can you hear me?
I can hear you now.
My own is it's not really a question actually, just to know when the recording will be dropped so we can sit down and follow up.
Okay.
Someone is, perhaps everyone should mute their speaker, please.
Okay, so I will send the video just now. Once we just round up now, the video is ready. I'm going to forward it now to us, to the group, so that everyone will have the session for today. So thank you very much. I believe
Thank you, sir. So I think the material, like you said, will come equally alongside the video. The class is actually making serious meaning. We are learning a whole lot of things. You know, this method you are replacing with the ones we are not used to actually will actually help us. Thank you.
okay. Thank you, everyone. Thank you, and have a good night rest. I will send the video now. Thank you.
Yes. Thank you, sir.